Hi traders, Nathan Bray here from ACY Securities. Now, I want to show you this great new tool from Finlogix. There's a free link in the description below. Now, when you've got some uncertainty in the market, and I know that's happening very regularly at the moment. In fact, if you go into the Finlogix economic calendar, you could see this morning around lunchtime, Sydney time, we had the interest rate announcement coming out on New Zealand. Now, if you're in that trade, you might be thinking, if something unexpected happens, how could that affect my trade? Might I need to exit this trade? Might I need to increase my position? What's going to happen? So when that anxiety and fear kicks in, this is where I use the Finlogix tool. So it allows me to find some solace by using the data. So using the tool here, I'll literally switch it on for this morning's interest rate rise, and therefore that's going to give me access in a couple of minutes to get my head around whether it's going to come out as forecast, or in this case, even better than forecast. So if it's to do with an interest rate, central banks have been telling us over the last year they're going to raise rates rapidly to fight inflation. So let's start there. I'll literally click on prices and we'll look at the year-on-year inflation rate. Now, this gives me access to find out that interest rates have been risen rapidly to fight inflation, but if we look at the actual data here in a second, it tells me that we've seen inflation move up from the start of 2022 to now from 5.9%, and it's risen all the way up to 7.2%, and it's holding steady despite the rapid rising that they've experienced. So from there, it looks to me like if they're forecasting another rate rise, then inflation is the cause, okay? Then inflation's sticking around, then there's no reason why they won't continue to raise. Now, the other thing I want to check is, well, is there anything else that might cause a central bank to reverse its stance? So I'm going to look at things, first of all, like unemployment. So if I look at unemployment, I can see the rate is down near all-time lows. So it's at 3.4% at the start of the rapid rate rising, which may cause some contraction in the economy, the tightening. We're literally seeing it move up a smidge from 3.2% up to about 3.4%. If you click on all, you can see that, you know, we've had unemployment rates up above 6% in New Zealand, and it's been on the decline. So it's a very tight, stable labour market, and therefore we see that the interest rates haven't really had a massive impact on their employment rate. The other thing I'll look at, of course, is their GDP. So GDP, folks, you can look at it by quarter. You can choose what element that you want to look at. And I'm looking at it here and see it's gone from minus 3.7% and it's now just below zero. So a huge improvement. In fact, there have been quarters there that have been quite positive. So we haven't seen a massive pattern there of contraction on their GDP. So when I look at GDP and I look at labour costs are going up, I look at inflation rates, and have a look at the food inflation as well. It's moved up from 7.4% up to 12%. So this inflation isn't going away. And keep in mind that labour costs are just a price as well. So prices are rising, the economy seems somewhat stable, but with a little bit of lower growth. And at the same time, we've got a lot of people employed compared to what it's been like in the last 50 years, folks. So looking at all of that data in 2 minutes before a news event is going to come out gives me some solace in the data and takes away some of the fear when I'm in a trade to say, well, there's no real reason why this rate shouldn't be risen as expected. In fact, that data came across so good, they ended up raising rates more than expected. So it's up at 5.25%. That's higher than the Federal Reserve. That's all from me, folks. Check out your Finlogix in the link below and have yourself a great trading week.